gentlemen, a very warm welcome to our next sub-session, which is about promoting inter-regional trade through ECA financing. And I would like to take this opportunity to extend a very warm welcome and invite on stage our session moderator, Ms. Geeta Muralidhar, who is the chairman of ECGC, to please join us on stage. Ma'am, if I may request you to join us, and please welcome her with a big round of applause. I would like to briefly introduce our session moderator before inviting our other important panelists for the session. Ms. Geeta Muralidhar is the chairman and managing director of ECGC, one of the prime export credit agencies of India. She is, ladies and gentlemen, the first lady to head a government-owned insurance company, and she's also the chairman trustee of the National Export Insurance Account, a trust which has been set up by the Ministry of Commerce and Industry, Government of India, for providing export credit insurance cover for promoting medium and long-term exports. She has over 35 years of experience in the field of export credit insurance in various capacities at different centers, and she has also been the vice president of Bern Union, an 80-year organization of export credit agencies in the world, and is the managing committee member. She was also the first Indian to hold this position, apart from heading the regional Asian group. So we are indeed very privileged to have her presence here with us. I would like to now invite and introduce our panelists for this session simultaneously. May I now invite Mr. Vinko David, Secretary General, Bern Union, to kindly join us. Mr. Vinko David was appointed the Bern Union Secretary General in March 2017. Prior to this, he has served as a management committee member and as chair of the Investment Insurance Committee. He has over 30 years of experience in various aspects of credit and investment insurance, including more than 20 with leading international credit insurer Atradius, in diverse management roles across strategy, product development, economic research, product finance, marketing, underwriting, and claims. We are extremely pleased to have him here with us, and a very warm welcome to him. May I now invite our next panelist, Dr. Biswajit Dhar, Professor, Center for Economic Studies and Planning from the Jawaharlal Nehru University, New Delhi. Dr. Dhar was a Director General Research and Information System for Developing Countries, a think tank under the Ministry of External Affairs, Government of India. He has served as a head of the Center for WTO Studies under the Ministry of Commerce and Industry, and he has been working on trade and development issues for more than 3 decades, having served on a number of expert committees of the Government of India and also represented India in bilateral and multilateral negotiations. So a very warm welcome to him as well. May I now invite on stage our next eminent panelist, Ms. Diana Smallbridge, President of the International Financial Consulting Limited. She has a firm that she founded in 2000. Ms. Smallbridge has worked with development finance institutions and agencies from around the world, including multilateral development banks, national development banks, SMEs, and export credit agencies on projects over 50 countries. Her primary focal areas are institutional strategy, performance evaluation, and corporate governance, and she has an extensive network within the development banking community and knowledge of best practices. She is also the chairman of Green Capital Advisors, a branch of IFCL focusing on the advancement and financing of climate-related technologies and services. We're very extremely proud to have her here with us. May I now invite Ms. Padmavati R., General Manager, ECGC, to kindly join us. A very warm welcome to her. She started a career with UCO Bank before moving to ECGC as a probationary officer in '82 and served in different offices of ECGC in various capacities. She has a very rich experience and exposure in short-term and medium and long-term business operations of the corporation and was the regional head of the Northern region. In her career spanning 35 years, she has varied experiences as head of HRD, investment, customer grievances, to name a few. So with these words, ladies and gentlemen, I extend a very warm and hearty welcome once again to our eminent panel here. And with that, I would like to now request session moderator to kindly make her opening remarks and moderate this session.
Thank you. Good evening to all of you. It's a privilege for me to be here in this conference, and I'm more honored to have my panelists, each and every one of them with whom I have interacted personally in various contexts. And we have already decided to have fun for the next 1 hour. It's up to you people whether you want to have or you want to participate in the discussions. You would all agree that there is some kind of overlap, obviously, between the previous session and this session. We've already discussed about inclusive trade finance with MSMEs and role of various agencies when we discussed the architecture. We are going to now discuss on promoting intra-regional trade through the ECA financing and a little bit of risk mitigation too. This session would be relevant for all those people who would like to know what exactly is the role of an ECA and how they should function optimally. Since the global financial crisis, the trade finance industry has benefited from the revival of an export credit agency in various countries, along with the multilateral development banks. In fact, in the 2017 ICC's Rethinking Trade and Finance report, you would have seen that more than 50% of the respondents had indicated that MDBs and ECAs were really helpful in fulfilling the demand for trade finance in both Asia and Europe. If someone had also gone through the same report which talked about the barriers to servicing the trade finance needs, you would have seen on the very top of the list was country risk ratings, constraints on bank capital, and prospective borrowers' risk. So this session will also talk about risk mitigation. The mandates that each of the ECAs carry, which exist in different forms and shapes in each of the countries, is very unique, and we continue to wonder, and we have always been wondering, how to balance the developmental role along with our commercial interest, commercial role. So that's my opening question to all the panelists. How important is the role of ECAs to support trade finance while balancing the commercial and the developmental objectives? I would throw open this question first to Professor Dhar, and then I would request others to take over in session. Thank you.
Thank you, Geeta. And first, I'd like to thank the organizers, and particularly Mr. Malik, for having me here to share my thoughts on an issue which I was sort of thinking quite a bit when I was on the board of the Exim Bank of India a few years back. Now, some of the things that we had to say have already been said. You know, the earlier panel has actually preempted us quite a good deal. Now, the specific issue that Geeta raised about the role of the export credit agencies, I think it will be clear from the discussion that we had in the earlier session that there is clearly a role that the export credit agencies have to play at a time when we are seeing a kind of recovery, the global economy and trade picking up. So there is a definite role that the ECAs play, particularly in the context of promoting regional trade. Now, we heard from the earlier panel that the importance of value chains and in regional integration, and all of you would know that the regional integration that we are seeing, particularly around our region here in Asia, are both seen as promoting the value chains and also supporting the value chains, because there is already existence of these value chains here, and the regional trade integration, the rules that are being framed are sought to be supportive of these integration of these value chains. Now, the problem is that there are many countries in the region, including India, I would say, where, which are not part of the value chains. In fact, one of the concerns that is there, you can't, India has not been participating in the value chains the way, it should have, possibly. But then value chains also, if you again refer back to the earlier panel, have this problem of lack of inclusivity, because there is a certain dynamic of these value chains, and it's not possible for an isolated MSME in some country to participate in the value chain unless, of course, the driver of the value chain so desires that that MSME is going to be part of that the value chain. So in order that MSMEs can actually participate in these value chains, I think there is definitely a role that the ECAs need to play, and they can do the hand-holding so that these smaller enterprises can actually come in. Because, again, we all know that if you are looking at the possibilities of inclusive growth, then that growth has to be anchored on the MSME sector. So I think the ECAs and many of these ECAs that we are now seeing in the region, they are transforming themselves, and actually they're becoming more responsive to the needs of the MSME sector. So there are a number of very good cases where this is actually taking place, and I think there is a lot more possibility of the ECAs to really focus on these sectors. So I'll come back later, maybe.
Thank you, Professor, for your initial comments. May I request Diana?
Thank you, Geeta. And it's a pleasure to be on this panel. I think the last time I saw Geeta, we were in reverse roles. I was moderating and she was a panelist in London. You've asked what I would say is a bit of an existential question about ECAs, the development mandate as compared to the need to be commercially viable. And that gets at the heart of ECAs as fundamentally development finance institutions supporting trade. And a DFI can be have any kind of public policy thrust. This room is filled with development banks from different stripes, whether they are SME banks, whether they're infrastructure banks, whether they're Ex-Im banks, and the financial products, be they loans, guarantees, or in the case of an ECA, also export credit insurance. So that, the question of being a development finance institution, I just want to set straight. What's interesting about the ECAs is they started in the OECD world now 100 years ago. Well, next year will be the 100th anniversary of the UK Export Credit Agency. And so the concept of thinking about development impact is not necessarily well established in that sector. To the point of relevance, I recall, and Vinko, you may remember the time 25 years ago, because we've been around this industry together for many, many, many years. When US Exim Bank, their words, their modus operandi was planned obsolescence, waiting for the day when the markets wouldn't need them. And that day has yet to come, and I would venture to say it'll never come. The question of balancing then the development impact versus commercial viability is a challenge insofar as if you are taking risks that the private sector is unwilling to, how is it you will continue to be financially viable? Moreover, as a trade agency, an institution providing trade finance support, WTO issues come front and center, and so the concept of a trade subsidy becomes something that an ECA needs to take account of. So these are challenging issues for ECAs, important issues, but I think the question of relevance is one that should never really be asked anymore. We've seen that ECAs have a role, and they will forever.
Thank you for reassuring and reassuring about the relevance of ECAs. David, Vinko would like to take over?
Yes, thank you, Geeta. And it's a great pleasure to be here and also to talk with many of you about development finance and commercial finance supported by ECAs and how they are complementary. But first, I would like to take a step back. What essentially is an ECA doing? Essentially, that is insuring exporters against the risk that their buyers do not pay. Now, that sounds quite simple. It is actually quite simple, but what does it lead to? Of course, it leads to protection of the exporter's balance sheet. That is important. But what maybe is more important is that it enables financing, bank financing, commercial bank financing. It thus unlocks bank financing in various ways. It can be a very simple way by simply assigning an ECA's policy to an exporter, assigning that to a bank, but it may be also covered direct to a bank. There are many ways to do that. And really, as Diana has said, before the credit crisis, 2008, some governments were thinking that the private market could take over. That has not been the case, and I agree that will never be the case because, especially when it comes to the financing side of exports, insurance companies can probably not fully take over the role of ECAs. Just a few figures, data to throw at you. Last year, ECAs covered for more than $1 trillion in trade. That's one with a lot of knots behind it. And actually, also in most of your countries, that happens, because most of your countries do have ECAs. Actually, all developed countries, almost all developed countries, have an export credit agency. Most emerging markets nowadays also have ECAs, and even a number of developing countries have ECAs. So that figure of 1 trillion every year again, and growing since the credit crisis, is telling, because that trade might not have happened had the ECAs not covered it. Because the banks would not allow the exporter to embark on such an enterprise, such an export, or it would have been too risky for the exporters themselves because it could risk their continuity. So that in itself is already a very strong narrative. Now, ECAs, and it's very good to realize that, are not charitable organizations. They must at least break even. That is even enshrined in WTO requirements, WTO legislation. Now, why is it then that ECAs at least break even, but many of them also making a profit or a surplus. Why can they do things that the private market cannot do? The reason is that ECAs have a very long breath, because they do not need to report to their shareholder every quarter. They can take a very long risk. They can wait until eventually there is some recovery. Eventually there is a collateral coming back, or eventually the buyer will pay. And also they can spread the risk over all the national taxpayers. And the taxpayers base in many emerging markets, many of your markets, is increasing. So that is why ECAs can cover risks where not always the private market can do that, because they have a longer term look and they can spread it over a broader base. So that is essentially how you can how you can get together, how you combine both the requirements to be commercial and have a developmental impact. Lastly, the developmental impact goes beyond that $1 trillion a year, because it's not just the exporter that benefits from the cover, it's also the supply chain leading up to the exporter. It's even governments, because they have additional tax income. So it has a much wider impact than just covering the exporter or its bank.
Thank you. As always, Winko, very comprehensive and exhaustive. Padma, we have our practical, issues day in and out while balancing, the mandate and the commercial interest. I'm sure you will throw more light on this.
I would try and touch upon the point which you mentioned. Firstly, I must thank the organizers for giving me this opportunity to be a part of this panel. And I thank the chair for for raising a very relevant question in today's turbulent time. To work on commercial lines. Development is primarily to keep exports competitive and promote exports from the country, which is the mission for which ECGC has been set up. Thank you.
Actually, I would like to supplement, because it's not only break-even, it's a very unique situation in India with ECGC being regulated by an insurance regulator. So we are obliged to make profit and declare dividend year on year for every year. Whereas other credit agencies, as I have understood, They have a mandate that they have to break even over a period of time. It could be 5 years, 7 years, and that's exactly what WTO says, but the situation is different in India. All right, we move on to the next topic. You know, the global merchandise exports have been seeing a decline, but Asian exports have been witnessing a remarkable rebound since 2016. While the overall exports have increased during the period, intra-regional trade in Asia has continued to decline. Intra-regional trade can serve as an important avenue for shielding against decline in exports to developed countries. Now, going by, you know, we all follow the economic theory that the center of gravity, economic center of gravity is moving towards east, and it is hovering now between India and Pakistan, which I would perhaps assume. So the role of this region has become very crucial for the overall progress for the world economy. I would like to ask Professor Dar, do you really believe that intra-regional trade promotion is an answer to the question? And if so, do the ECAs in these countries have a specific role in augmenting it? I would like Professor Dar to open the topic and Padma to supplement it. Thank you.
Yeah, I think intra-regional trade in the Asian region has really been the driver for these economies. As I was mentioning earlier, that you know, the way the organizational structures have evolved in this region through these value chains have meant that, you know, there has been a real spurt in intra-regional trade that we have seen in this region, and therefore you know, we see the incremental value that that this region is getting through the kind of growth in trade over the past decade or so. Now, again, as I was saying, that, you know, the export trade agencies here have a very important role, because, you know, we had this first flush of integration that took place with ASEAN and a few of its partners, and now we are seeing that this is actually expanding, and India is coming into this fold as a partner in a very big way. Again, my concern is that, look, if you have to see a proper integration of the Asian region, you know, many of us have been talking about an Asian century, where you not only see the East Asian region sort of prosper, but the East Asian region also combines with the South Asian region, and the South Asian region with its huge, you know, sort of market and the population can, and if harnessed in an imaginative manner, can really provide a huge momentum to the global economy. And so it makes eminent sense for, you know, looking at regional integration, not just in terms of the East Asian integration, what we are seeing at this point, but also in terms of the South and East Asian region. And what can really trigger this process of bringing these the entities in South Asia closer to the big markets are, I think, these development finance agencies. And so the development finance agencies going forward can have a huge role to play. Of course, we heard the constraints under which the development finance agencies actually function. You know, we know the problem of viability. We know the problem of the WTO rules, and, you know, the extent to be the agreement on subsidies and countervailing duties actually may kick in. But I think that's where the big challenge is, that how does one use these development export finance agencies, not just, as I said, that, not just in terms of export credit agencies, but in the larger context of development finance, and getting the best out of the regional integration. Now that's, I think, the biggest challenge that we are looking at future.
Thank you, Professor Der. Padma, you could just share what kind of products for exporters and for the banks will help in promoting this intra-regional trade.
Okay. Well, in the previous panel, a mention was made that we need to have several products which would really enable trade finance and promote exports. So in this context, ECGC has a wide range of products to ensure that the exporter gets access to trade finance adequately, and at the same time, we provide credit insurance covers to mitigate the risks of non-payment, the credit risks which arise from international trade. Firstly, to promote financing for trade, international trade, we have insurance covers for the banks who lend to the exporters. That is one product which we have, and that enables the exporters to avail finance from the banks and grow their business. Now, we also have a direct insurance cover for the exporters, which is a policy to protect against non-payment by the overseas buyer, the country, and also the LC opening banks. So the point I'm trying to make is that in order to promote intra-regional trade through these several insurance products, which would enable financing and risk mitigation, ECGC has been playing a developmental role, which is the focus of this meeting today. Apart from the business of short-term covers, we also provide medium and long-term covers. And in the Asia-Pacific region, I must make a mention that India has huge exposures, and we have an exposure of almost 6,200 crores, where projects are being executed in countries like Vietnam, Thailand, Malaysia, and so on. Sri Lanka. Sri Lanka is one of the major markets for the medium and long-term exports from India. So I think with all the products that we have and the government initiative towards promoting intra-regional trade by entering into various free trade agreements, ECGC as a government company also falls in line with the government policies to take on those initiatives forward. Thank you.
Thank you, Padma. Now for the big question. The big question is, originally, historically, export credit agencies did only credit insurance or guarantees. So they were basically insuring the receivables of the exporter, as Winko already mentioned. But in the recent past, we have seen a lot of export credit agencies getting into lending. Lending not only for medium and long-term exports, but also for short-term exports, getting into working capital lending. Now, the moot question is lending going to be the only, direct lending going to be the only answer? Is it recommended? Do we have other options? What are the implications? I would like Winko to take off with this?
Thank you, Geeta. Now, direct lending may be a solution sometimes, and in the previous panel, they discussed the high KYC costs of both banks and corporates, and these costs are sometimes simply too high for commercial banks to finance. And that would really be a good reason for ECAs to step in to provide direct finance. But it's not the only way. There are many other ways that ECAs can support trade without financing directly, without using their balance sheet, so to say. And that is mainly by covering banks. What we see around now is that, especially for SMEs, but also for larger corporates, it's not just the financing of the export receivable that is an issue, it is also working capital that is an issue. Sometimes it is even the biggest financing issue. Now, what we have seen with many ECAs, that they have started to introduce working capital cover, ensuring banks against the risk that the exporter will not repay the working capital. That is quite a simple cover, but it's a bit of a strange animal in the product lines of ECAs, because they were used to export risks, a foreign buyer or foreign borrower not paying. Now this is domestic risk. But what we increasingly see is that ECAs get into domestic risk to help their exporters. So that is the cover of working capital, that is the cover of performance bonds, advance payment bonds, that often needs to be put. And that goes even a bit wider, because some ECAs say, I will insure you your working capital for that particular export business. But some ECAs go even further. They assess, together with the exporter, what the ratio of export is of their total revenues, and then insure that part needed for their working capital. So not tied anymore to a particular individual export transaction, but say to the whole export turnover. That could even be done with bonds, although that requires some more financial engineering. But these are two important ways that ECAs can help exporters, in particular smaller exporters, with their financing needs. It doesn't want me to carry on, so I'll give the mic back now. Thank you.
Thank you. This is an important question because it gets to, again, a bit of the existential question related to ECAs. And we often ask ECAs when we're working with them, do you have a mandate to complement the private sector, or are you free to compete? And that actually very much drives some of the policy direction and therefore the product development. So if it's a complementarity mandate, which by the way, the ECA I grew up in was EDC in Canada, and it does not have within its legislation the notion of complementarity. So it's free to compete with the private market to whatever extent. But if the question is complementarity, then the further question is, what is the market gap? If the market gap, as we saw during the global financial crisis, was a liquidity gap and not just a credit gap, the commercial banks weren't able to lend. It's not that they were unwilling, they didn't like the credit risk. In many instances, I mean, that was part of it, but in many instances, they could not access the capital markets themselves. So you saw ECAs like EDC in Canada having the capacity to lend, being able to deploy quickly into the market, US Exim Bank. And then you began to see in Europe many of the European ECAs moving towards lending facilities, some doing direct lending, others doing capital markets cover for the commercial banks then to be able to do the lending. So it's been a product that's been quite critical in recent years. And for a country like India, where you've got India Exim Bank, you've got ECGC, it's a very interesting, you've got the instruments. And that's what's important, whether they're in one institution, whether they're in two institutions.
Yeah. So we do have the institutions which complement and give the right support at the right time to our export industry. You're right when you said ECAs support a host of transactions which either may not have been supported by the commercial banking sector, or even if available, will be at a relatively higher cost. And so this is particularly true in sectors such as MSMEs, and here the need for highlighting the contribution of ECAs towards what we would call as the inclusive growth agenda, which was of course touched upon in our previous panel. But I'd like to ask my panelists also to air their view about the role of ECA in inclusive trade financing. If you understand it as MSME or any other agenda-specific needs, you're free to give your comments. Over to Diana.
Oh, me again. Certainly, back to the question of a market gap and the mandate of an ECA to promote a particular public policy area. So it's MSMEs who are active in export. You look at the level of service and products available from the commercial market. Commercial banks may not be ready to fund those yes. small companies. Private credit insurance may not have an interest. The premiums are just too small to be worth the cost. So at the end of the day, you've got a segment of the population, of the exporting population, who are underserved. That certainly is the mandate of an ECA, but you have the challenge, as any financial institution, of costs. And so many of the ECAs are absolutely focused on how can we provide low cost but high touch service to the MSME sector. The question, Geeta, about inclusive, of course I think of inclusive means all underserved sectors. What about women entrepreneurs, women exporters? There's a number of different segments you could look at.
And we look at the rural.
And rural, yes, rural, exactly, agriculture. But we were joking before the session of maybe we should set up a micro women's ECA. I'm just joking. I'm not sure it's a good idea because...
All of you, please welcome that idea. Micro ECA.
Okay, please don't put it in the Delhi Declaration. That's all I'm saying.
Thank you, Diana. Padma, I'm sure you have lots to say about MSME support.
Sure. I think I would like to add to what Diana mentioned now. There's no dispute about the role and the contribution which the MSME sector is making to the GDP growth of the country in terms of employment generation, in terms of exports and so on. I must mention for the information of the audience here that ECGC has developed several products, especially for the MSME sector, talking of the inclusive growth, where understanding the needs of this segment, we have put in place products which would be very attractive to them. And the business of ECGC, surprisingly, we have seen when we talk of the direct covers that we have given to the exporters, almost 90% of our customers today fall in the MSME category. And talking about the working capital facility, which Mr. David also talked of, the exporters who are getting funded by the banks and which are covered by ECGC constitutes almost 88% as of now. So you can well imagine the inclusiveness that ECGC is bringing in through its various products. I hope.
Thank you. Thank you, Padma. Thank you. No, I didn't decide to ignore the gentleman, but I wanted to have a tete-a-tete with my other colleagues too. I would like Professor Dar, who has already touched about the MSME role and ECA's support in that. Do you have anything more to add? Yes.
I think, one needs to look at the ADB surveys, and, they've identified a number of gaps that exist, not just in terms of the overall availability of trade finance. And so there's clearly a market failure out there because, the commercial banking sector is not stepping in. And the gaps are quite large in terms of, the numbers that they're talking about. And a substantial part of the gap that ADB identifies is actually in the Asian region. So despite the fact that this region is growing in terms of trade, and we discussed the fact that, there are, even rosier prospect going forward, but I think that the real potential is really getting stymied because of all these different kinds of market failures that we're looking at. One of the areas that has been flagged, as is continuing to be flagged by the ADB, is the fact that women entrepreneurs are really not seen to be viable, and their rejection rates are very high. And so again, the whole issue of gender that you brought in, I think it's very important that one actually looks at this issue because, from the larger inclusive growth perspective, it's very important for us to look at this segment of, the entrepreneurs and to really promote them, especially in our region. So I would say that, apart from the MSMEs, and there are a whole range of issues that MSMEs face, the women entrepreneurs, and you also flagged this issue of agricultural exports. India now is thinking in terms of really promoting agricultural exports.
Yeah.
And I do not see how this can actually be done without a very active involvement of the ECAs.
Yeah.
So I would say that, one identifies all these areas of, sort of market failures.
Yeah.
And serious attention be given to this problem, and the plugging in has to be done by the ECAs, like, the two major agencies that we have in India. Thanks.
Thank you, Professor Dar. So we have been seeing that in the ecosystem of trade finance, we have multiple players. You have commercial banks, then you have the development banks, then you have the credit insurers, then you have certain credit guarantee mechanisms set up by governments, you have the multilateral development banks, and last but not least, we are hearing that Maersk has started its own trade finance programs. And we have number of NBFCs, non-banking financial companies, resorting, extending these support. So we have multiple players in this field. What could be the optimum and the right role for ECA? Should it go for any kind of collaboration with any of these or all of them or some of them? What exactly would emerge as the ideal provisioning, you know, provider of trade finance. I'd like Winko to share his thoughts on this first, then I'd request other colleagues.
Well, thank you, Geeta. That's a very wide question that requires maybe an extensive answer, but that would not be possible, having regard to the time and the ministers who are coming. But there are certainly a few areas where ECAs could cooperate with other organizations. First of all, I think when it comes to the smaller SMEs, that there is really a role for ECAs to play, as discussed. But the big issue here is not to develop products for SMEs or SMEs or MSMEs. It is about reaching out to them, because most SMEs in your countries do not know of the existence of ECAs, let alone the combination of ECA and bank financing, which could increase their financing possibilities tremendously. So a lot has to be done in marketing to SMEs. Now, therefore, for marketing, ECAs need partners. That is commercial banks, that is other public organizations, such as development banks, all sorts of governmental development organizations, that they need to work together to create awareness among SMEs that there is much more possible than they think is possible, that they do not need to refuse an order coming from Latin America because they do not know the market nor the buyer. So there is an important area of cooperation. What we have seen as well is that when it comes to large transactions, banks are still willing to finance. There is still liquidity about. But there is another issue here, and that is a bank regulation, capital allocation. That sometimes makes banks wary, even though their balance sheet is protected by ECA cover. They still need to allocate quite a substantial chunk of capital. Now, we cannot change the regulators, I'm afraid. We can feed them, but eventually they'll come up with a regulation. So we can look for alternative sources of funding, and that is institutional investors. That's what we have been seeing lately, since a few years, that institutional investors have stepped into export finance. Actually, in the previous panel, that has also been mentioned. What you could then do is to increase that funding by developing products that protect these institutional investors. So my background is at Tradius, that's a Dutch credit insurer, and actually number 2 in the world, that has developed products for capital market investors. To invest in export finance, not directly by extending loans, but by funding banks that can then help exporters. I'll stop here. There's a lot more to say. Maybe we can do that after this panel session. Thank you, Geeta.
Dinner. Yes, thank you. Thank you, Winko. And Professor Dar would like to have last comments on this? Or may I pass on to Diana? Diana, please. What could be the optimum role?
Very quickly, if the ECA is mandated by the government to be the trade DFI, then I believe it has a role in convening through collaboration the main actors within the ecosystem.
Okay.
And coordinating at the policy level, at the operational level, be it marketing or whatnot, and at the transaction level, because there will be many cases of transactional cooperation.
Yeah. Thank you. Thank you. That was very conclusive. Padma?
Just a small addition over here. As Mr. David mentioned, it is very important to create awareness of the existing products for particularly for the small and medium exporters. Generally speaking, the big corporates, as professionals, do get to know about the availability of various facilities. So in this regard, what I would just like to mention is that, ECGC continuously organizes these awareness programs for the customers and non-customers on the various risks that are involved in international trade. And we have done and we continue to do several programs, which is also mandated by the regulatory body here in India. The Insurance Regulatory Authority, Development Authority has directed the insurance companies to carry out these awareness programs in the interest of the general public and in the interest of the beneficiaries of these products. Thank you.
Thank you, Padma. So, one of the drivers for future growth will definitely be the regional trade. And we have high potential emerging markets in Asia Pacific, which has a 31% share in world trade, same as the Europe. We have a favorable demography, robust macroeconomic policies, domestic growth trends are very favorable. We have India, Vietnam, Indonesia, etc. Asia Pacific, but is dominated by small business, if you leave out China, Japan, and Korea. And so, we've got to say that globalization 2.0 has to be really inclusive in the very term. You know, literally, it has to be inclusive. It cannot happen just at the top. It has to come down to the bottom rung, the smaller entities who had been left out, due to which there is a rise of populism all over, leading to trade war. So let's look at this inclusive trade finance support, which the key role of an ECA in counterbalancing the instability during the periods of economic uncertainty. ECA will complement wherever you have risk-averse players to fill the gap. And as Dan has said, ECAs are here to stay and play their true role. I have all my esteemed panelists who agree with me. I'm sure you all would also agree with us at the end of this session. Thank you very much for your patient listening.
Thank you, session moderator and our speakers for the deliberations and giving us a very deep insight into the presenting of the promoting of inter-regional trade through ECA financing. Ladies and gentlemen, before we conclude this session formally, may I please request our session moderator in her capacity to kindly give the mementos, the ADFIAP plaques to our panelists. Ma'am, may I please request you to present the ADFIAP plaque to Mr. Vinko David.